Welcome back to the forum. We are the reason between you and lunch, but I promise you it's going to be worth it, okay? So for this panel, integrating global standards and climate-related disclosure into financing and investment strategy, we have a very nice lineup of speakers. Can I invite my speakers to come on stage to join me? So we have Frank Leung, Head of Banking Policy of the HK Monetary Authority. We have Danny Wong, Deputy General Manager of Economics and Strategic Planning Department, Bank of China, Hong Kong. And Dennis Fook, Head of Fixed Income ETF Portfolio Management, Mirae Asset Management. On the screen, we have Juliet McCreasy, Senior Director, Head of APAC Sales, Moody's ESG Solutions. And Yongsheng Li, Director of Policy and Regulation Division, Guangzhou Municipality, Local Financial Supervision and Administration. So speakers, please kindly take your seat. Thank you very much. And I finally get to take my seat too. Fantastic. Like I said, it's a very interesting lineup. We have 2 policymakers, a bank, an asset manager, and a service provider. So I think we can definitely hear different perspectives and views when it comes to standardization of taxonomies and climate-related disclosures. So for sustainable finance, just to set the scene, we are looking at sustainable finance becoming increasingly mainstream. I don't think anyone would argue with me on that. If we look at sustainable bonds, we're looking at about 12% of the total debt capital market, compared to just 2% a few years ago. So the growth is significant. For ESG AUM, asset under management, according to research, we are looking at 2.5 trillion US dollar equivalent as of first half of this year, compared to just over 1 trillion about 2 years ago. So sustainable finance continues to rise despite of global uncertainty. So in the meanwhile, ESG, the 3-letter acronyms for those who follow some of the recent publications, is being challenged and debated with the rise of greenwashing concerns. So we are bringing some very topical discussions in front of you in terms of standardization, which I think is becoming increasingly important. Particularly, we are seeing some of the markets becoming more fragmented. So I hope our speakers can share some of their perspectives. Just to let you know that we would love to take questions from the audience, both on-site and online. So please scan the QR code on your badge to submit your questions. So I will be checking the iPads as we go to address your questions. So let me start the first round of questions to my speakers. From your perspective, how do you see harmonization of taxonomy standards shape policy and market development? And what are the obstacles and how do you address them? Maybe I'll start with Frank from HKMA.
Okay, thank you, Chaoni, for the nice introduction. I guess we are all probably aware that different jurisdictions have developed or in the process of developing their own sustainable finance taxonomies. And I think that this is not conducive to cross-border sustainable finance flows because the green definitions, the methodologies could be different across different taxonomies. And you are all probably aware that the International Platform for Sustainable Finance has published the so-called common ground taxonomies, which try to identify the common elements between the EU and China taxonomies. And I think that this is an important step in addressing these fragmentation issues for 2 reasons. First of all, as I said, that the CGT identifies activities that are considered commonly green in both the EU and the China taxonomies. This can immediately help facilitate cross-border financing of these commonly green activities. And some of the banks have already issued green bonds based on the CGT. And my understanding is that more may be in the pipeline. The second reason is that the CGT exercise provides a framework or methodology for comparing different national taxonomies. And the IPSF now has a plan to expand the comparison to include other taxonomies as well. So, and given the importance of the CGT and the EU and Chinese financial institutions in Hong Kong, the financial regulators in Hong Kong, including the HKMA, we have announced our intention to be aligned with the CGT when we develop the local green classification framework. So now our plan is to issue a concept paper near the end of this year or early next year to set out the structure and the core elements of a local green classification system, in which we will try to address some of the feedback and suggestions on how to address the fragmentation issues that Chaoni has just mentioned in the beginning. Thank you.
Great. Well, that's exciting to look out for in terms of the concept paper. Can I actually ask Li Chu? Li Chu, 那您对我刚刚的这个问题就是
Mr. Li. So, Mr. Li, so what's your view on my question? How does the setting of standards shape markets and policies? Thank you. So on the issue of green standards is a very important foundation for the development of green finance. We have worked hard in this regard for years. We know that the PBOC has decided that this is a very important part of our work, and Guangzhou, as one of the first testing developmental zones for green finance in China, we also actively participated in that work. For example, in the Guangzhou emissions exchange, we have participated in the setting of relevant standards, financial tools, and other setting of green standards in China. At the same time, we in Guangzhou is also actively promoting relevant institutions and green bond issuers to apply these standards. So we think that this happens in two dimensions. Firstly, as we continue to enhance our in-depth understanding of these standards, we would definitely be able to, well, based on different areas would have different developmental stages, and different industries would have different contents, and therefore there would be different standards arising from across different regions, and this would help the horizontal integration of these standards.
So therefore, in 2021, the working group launched this CGT, and this year we made an update on the CGT. We believe that the issuance of CGT is a very good example, showing us the horizontal and vertical integration of our own standard versus other standards in the other parts of the market. That this will be very helpful for the decision makers to further improve their standards. For example, in July this year, PBOC and CSRC issued regulations on the principles of a green bond in China, and the CGT was taken as one of the reference documents in such new policy, particularly in terms of the overseas bond issuers and as well as the procedures of issuance. CGT has been in the market for less than 1 year, but CCB, BOC, ICBCs, and so forth, these leading financial institutions in China, they already started using this CGT in the issuance of a green bond in other markets of the world, particularly CCB. In December last year, CCB issued the first CGT-backed green bond, and the process was used to help with clean energy projects and clean transportation projects in the Greater Bay Area. So therefore, you can see that CTG has been a very helpful tool for the financial institutions in the issuances of green bonds. and it has been very important guidance for the financial institutions. Back to our own practice in Guangzhou, we have been taking this CTG as a very important tool to help different businesses in Guangzhou in issuing their own bonds. For example, the total amount of a green bond being issued in China, in Guangzhou, already exceeded 8 billion yuan, and 8 billion yuan RMB. And in the future, there will be more bonds to be issued in Hong Kong and other markets. We think that this may take some time for us to keep improving the CTG in the future. However, definitely it will be a very important tool for us to keep improving our own policies for the financial institutions here. Thank you very much. Thank you very much, Mr. Lee.
Time to Juliet. Juliet, you're always in quarantine every time we talk to you. Can you also share your thoughts on harmonization? I think as a service provider, you work with the buy-side, sell-side companies. How does it shape, the market development? Juliet.
Hi, good morning, everybody. I'm really happy to be able to participate even remotely to this annual event. So yes, as a service provider, I think we've got a unique positioning to speak about, on the two sides and different stakeholders regarding that are using the standards and the taxonomy. So one thing to remind is just the taxonomy is not an outcome in itself. It's just a tool. It's a tool to help directing the flows of capital to green and sustainable projects. And as you described, Chaoni, and many others described already, there's a proliferation of taxonomy over the years. And while we have observed improved guidelines and taxonomy being introduced, it's still not really easy to harmonize, and there's a lot of challenge to address. One of the key ones is the convergence to support market development in one way and innovation. As an investor, integrating ESG to assist in asset allocation, decision-making, and reporting requirements, it's really challenging. On one hand, they are really under pressure to act now. But on the other hand, many regulations are still being rolled out or just refined. So in theory, the convergence of green taxonomy will help global investors to act with much more certainty and to help them to understand what we consider as a green investment across the region. So rationale is straightforward for convergence. Greater convergence of standards will bring more certainty, transparency, reducing greenwashing, and will result in a more efficient market. So why is it so hard to achieve that? And I guess while there's some effort to improve coordination between standards, we are not yet there, and we are failing to serve investors. So there's a lot of things to do, and ESG and sustainable finance, unfortunately, is not black and white topics where, there's a lot of different stakeholders that try to find and to make their agreement. Some are using science to set green standards. Some are using normative arguments to set minimum social standards. Some others are using more moral arguments. And it's really hard to define which are the correct answer. And what we are seeing is that actors are trying to build consensus to set regulation. It could be as well a political debate, which is in itself not insurmountable, but it just delays the progress and the harmonization. Really, the example that we have been all observing this year was in Europe, with really the debate about inclusion of nuclear and gas in the green taxonomy, and we see how we could create friction and delay some discussions. So this is one of the challenges. The second one I would like to highlight is probably to how we define what is the adequate sustainable reporting standards and how long time it will take to be implemented. So there's really a urgent need for cross-economy information. So investors really want consistent and reliable information across and data across economic activities to provide them with a comprehensive coverage so they can understand the potential exposure to risk and opportunity of their diversified portfolio. In this context, if we set up the right sustainable reporting standard, the quicker it's done, the quicker the company can start to adopt them and skilling up in their reporting. But we all know that it will take a number of reporting cycles before getting there in terms of what we can expect of quality of data and quality of reporting. So this is really essential to pursue efforts, to enhance both comparability and interoperability of taxonomy and standards, while we bear in mind, of course, the difficulties of the common language. I think there's a consensus regarding science-based data that provides the granularity we want. There's as well a consensus around considering principle-based approach that aligns international environmental agreements, and it could be a faster way actually to improve comparability across many countries, and then the mapping exercise of the screening criteria can be done. We have also to bear in mind the national level consideration, meaning that each jurisdictions will have their own pace and their own progress with their own context. So I think finding the true common ground will likely require balancing between ambition. We want to have the best standard, but as well consensus and compromise. And it's where, guidance to support this interoperability, where taxonomy overlaps but diverge, is really important. So there's potential role here for international stakeholder or platform to be built, such as the International Platform on Sustainable Finance, to provide, all these links. So just to conclude, I think in a way, we are improving, we're getting there, but we have to be really practical to support this cross-border comparability and create a tool that can support all stakeholders, so investors, but as well countries and issuers, to meet the objective they want to achieve in terms of, Paris Agreement or the 1.5 degrees target.
Great, thanks, Juliet. I think Frank is taking note, in terms of some of the market challenges and the obvious benefits when it comes to harmonization. Great. Can I actually ask Danny to jump in here? At Bank of China, Hong Kong, what's your perspective, on this topic? And do you see challenge, when you implement green finance in your day job?
Okay. I think, first of all, harmonization of taxonomy is very important and useful to market development. From a banking perspective, it brings a lot of opportunities. First of all, harmonization of taxonomy means it improves comparability of different taxonomy and different green definition. It provides a sophisticated tool for market payers when they issue bonds or issue some asset. They can know whether they are response or to comply the foreign regulation or local regulation, so their asset will become more attractive to cross-region investor. So according to IIF, like the emerging market and development country, the finance gap of to meet the ESG goal, it attains to $2.5 trillion in Asian Pacific. And in China, according to some latest estimate, in order to meet the carbon neutrality goal, it attains to 140 trillion yuan. So according to this huge potential, bank this opportunity to cap this huge potential by leveraging this harmonizing taxonomy. Like to our corporate customer, we can offer a comprehensive product ranges like transition loan, green loan, sustainability linked loan, etc. to help our corporates to make transition to move to low carbon economy, and also to mitigate the climate risk and to capture the first move advantage of the regulatory change. Also to our retail customer, we also develop our green mortgage, green credit card, and green consumer finance. So we offer a sustainable option for our retail customers to be involved in this sustainable trend and advocate a sustainable lifestyle. Regarding your question about the challenging, I would like to highlight 3 core areas. It's about the data availability, data standardization, and data intelligence. What means data availability? We know that we all need data, and so it's very important for corporate to disclose their ESG disclosure. Otherwise, it's difficult to assess the risk of green asset and activities. But I think it will, in nowadays, like in Hong Kong, this is in a compile or explain approach, maybe it will be more successful when in the mandatory regime. And also data standardization, it means it also requires some standardized matrix and quantitative threshold. Otherwise, it's very difficult to do some cross-region comparison so that otherwise, with the investor have this comparable, consistent data, they can be more easy to communicate with the market and to make the asset. Finally, is the data intelligence. Data availability is only the step one. It's the only primary data. We also need some sophisticated data intelligence and capability. It needs a joint effort between the financial industry and some data provider to develop some data model, data technology, and data platform. Yeah, it's my sharing.
Great, thank you, Danny. Maybe I can turn to Dennis. You know, from the buy side, do you see the fragmentation that is occurring, or and the need for harmonization?
Yeah, sure. We really like to you know, hearing from other panel members about the comments, and specifically from Danny talking about, you know, cross-border comparison and also data availability. I think, you know, from buy side, I think definitely from a global asset management firm's perspective like us, we're very welcoming the harmonization of the taxonomy standard. The thing is that, you know, what we have been observing, especially creation of, you know, some of the vehicles like ETF or indexing funds, is that, you know, taxonomy fragmentation definitely led to some market segmentation in terms of product design of the asset management products, especially, you know, when we talk about the basket of green bonds or ESG theme equities or fixed income securities. That's why, you know, as you can see, you know, globally for different asset managers, when they try to, you know, design the products, when they try to get the client demand from different geographical location, they actually need to design different types of products based on different taxonomy. The main reason is that, as Danny suggested in previous conversation, is that, you know, there's no a very good apple-to-apple comparison across different taxonomy. That's why, you know, for example, when you create a green bond ETF, when you try to sell to European investor, even though, you know, I'm sitting in Hong Kong, I really want to actually, you know, list the ETF in Hong Kong. However, you know, some European investors would say they need some verification based on their taxonomy. That's why I really feel that, you know, the harmonization, just like the effort of EU-China common ground taxonomy, is going to be very helpful in driving up the scale in terms of developing asset management products. Another thing is that, you know, I think the market confidence is very important because, you know, whenever people talk about, you know, green products, talk about ESG products, greenwashing is a very popular topic. That's why, you know, having the apple-to-apple comparison, we believe that, you know, this will make global investors easier to make informed investment decisions in terms of sustainable space. Another thing is that, you know, I believe that, you know, as you can be observing, some CGT themed financial products like green bonds are being started to be labeled, you know, and also issued in Hong Kong recently. We definitely hope to see, like to see more, like, you know, when the other instruments, when they think about, for example, bonds being issued, then they can tag on some labels like CGT or different types of taxonomy. That can actually make our job much easier, because the thing is that when we try to construct a portfolio, we can find enough underlying securities to construct a portfolio. Because as you know, diversification is a very good selling point for lots of asset management products like ETF. And hopefully, you know, if I read through the latest CGT updates, you know, definitely I think they mentioned about some user cases that, you know, can be used in portfolio construction. I think, you know, for a lot of global asset managers sitting in Hong Kong, definitely we're very happy to be the pioneer one. Think about, you know, for the sustainable debt issuance in China, I think for the recent years, we have been seeing explosive growth. And even for the first half of 2022, I think it actually has taken the top spot. The thing is that, a lot of international investors, when they look at the sustainable debt in China, they really want to invest, because the thing is that Chinese fixed income market is number 2 market. And also, it has very good scale, and the liquidity is very deep. It's a little bit pity that, whenever they want to invest, they need to find the right vehicle. However, the main problem they cannot find the right vehicle is that, they need to have the harmonization of taxonomy. They need to understand whether all the bonds that are sustainable that you are buying, issue in China, which is consistent with the taxonomy. That's why we believe that, it's a long journey, that, this mapping exercise across different taxonomy. It would take some time, some effort, and definitely the whole industry ecosystem to build up, to promote. But I think it's definitely worthwhile from the global investors' perspective.
Great, thanks, Dennis. I think you're giving us some preview of how you would, as a fund manager, implement, CGT, Common Ground Taxonomy, in the sort of underlying selection and fund construction, which is great, which is something that we try to encourage the market to do through the launch of the use cases of CGT today. So I think we heard quite consistently that everyone wants harmonization, right, across different players. Are we aligned so far? Are we going towards the same direction and pace? Frank, what do you think? Mm-hmm.
So do you mean that in terms of taxonomies, that different jurisdictions share the consensus that there's a need to do more in terms of harmonization?
Yeah, and are we really taking actions, right?
Yeah, mm-hmm. I think that, the EU and China has, under the context of the IPSF, has already done an important step in coming up with the common ground taxonomies. And at the moment, the common ground taxonomy is still relatively restricted in terms of the scope. Mm-hmm. It only covers climate change mitigations. It takes time for the IPSF to work out the other parts. So I think that they do recognize there's a need to do that, particularly given that EU is a developed economy, whereas China is a developing economy. And we all know that for green financing flow, there's a strong need to flow from the developed economies to the developing economies. But I think that another issue, there are still a lot of issues not yet covered. For example, there's an issue of whether the existing taxonomies or classification system used in the market, are they compatible with the national taxonomies? Of course, you can argue that the national taxonomies are for compliance purpose, and ideally, if we have a system that can be used not just for market development, but also for regulatory compliance, then definitely we will have a universal language for defining green activities. And on that, I think that we are still quite far away from that, even though the IPSF is doing a lot of work on this front. And this actually is one of the feedback we receive when we talk to stakeholders on how we should design our local green classification system. And we try to take that into account when we release our concept paper. Yeah.
Great, thank you for sharing the additional color on alignment in terms of action. I don't know, Li Chu, is there something that you want to add to this question as well? Maybe 2 minutes?
Thank you, Chaoni. So, matter of fact is that when it comes to climate and ESG disclosure standards, we really hope that in the Greater Bay Area, particularly in Hong Kong, Macau, and Guangdong province, we would like to promote harmonization of these standards. For example, the HKQAA has a branch office in Guangzhou. We are actively supporting the HKQAA as one of the third-party service providers and Hong Kong side collaborators. We really hope that we could work with them. And recently, we have written a professional guidance for Hong Kong and Macau enterprises entering the Greater Bay Area, entering Guangdong, to issue green bonds. And under the GBA-GFA framework, we have already started relevant research, and we have seen preliminary progress already. So in that process, the regulators at the Guangzhou municipal government and other stakeholders are actively participating in all this work. We think that it takes time to harmonize all these standards. We hope that in the future, more and more projects can learn from Hong Kong's experience, since Hong Kong is a more developed region, and they could lead the harmonization efforts of different standards.
When it comes to the actual action in terms of alignment.
If we speak about climate, it's probably where we see the best alignment so far, or the best, tentative of, and it's where we are heading in the right direction. A lot of regulation, there's really a strong regulatory push for mandatory climate disclosure, and it's probably where, companies, corporates, investors, banks are the most ready as well. So it's a naturally push for companies to think about their climate risk and opportunities, but as well, their transition plan. So if we take, for example, I would like to take two examples where, this climate push towards regulations will help basically the stakeholders, such as the banks or the asset manager. The asset manager, and I think it has been mentioned already, they do really have a need to align their portfolio to net zero. And one way is to do that is to manage their transition climate risk and to understand, how their portfolio could contribute to the transition to a low carbon economy. So to do that, they need data. They need data on climate. And they need one of the key data to get its firm's greenhouse gas emission, but really provide a baseline for how they may be affected by the transition to a low carbon economy. We all know that really often, there's a correlation between high greenhouse gas emitters and companies that are exposed to the transition climate risk. They also need not only data for today, but they need forward-looking data. So they need to be able to understand how their investment will pay, of course, now, but as well in the long term. And it's really as well this disclosure or mandatory disclosure on climate data helps, to build track record. They have to build a database. And to do the gap between historical data and future companies as well, data and performance. So for example, at Moody's, we've got a temperature alignment assessment data, which is, we try to build, on greenhouse gas emission, and it's helped to improve the transparency on the net zero commitment of companies and organizations. But it does indicate something really interesting. For APAC, it indicates that on the average temperature alignment in APAC for the top 8 highest emitting industry hovers around 2.9 degrees. So what we can quickly conclude is that despite the increase in net zero commitment by a lot of organizations, there's really a significant gap between the tentative disclosure by the companies on their plans and how they're really going to implement these commitments. If we now take the example of banks, this is the same thing. For banks, it's really vital now and important to be able to assess their counterparties' emission and greenhouse gas emission to identify potential future financial risk and how they can have material impact in the future. So one way to do that is data from TCFD disclosure. It's really provide valuable information on potential risk exposure and how it's translated to material impact. And again, here we've got an interesting statistic from our Moody's TCFD strategy assessment. Only 8% of the company within our universe have disclosed development of a low carbon transition plan. So this is really low, 8%. And it just indicates as well that as he's helping, he's heading in the right direction. There's really a room for improvement. But I think, as probably Dennis mentioned, we are getting in front of same challenges regarding comparability, consistency, and comprehensive data for climate and for ESG. The quantification, obtaining the data themselves, but as well the calculation and methodology, and the assumption that we should take, or the lack of assumption. And I probably, I guess one of the great examples where everybody is focusing today is the Scope 3 emission reporting and calculation. It's just really highlighting the difficulties for company to be able to assess one of their potential risk, which is on, and the lack of visibility they have on their entire supply chain and network. Usually a company claim at least great success in reducing carbon emission from their own operation. But we all know that it's really challenging to be able for them to be able to capture what their supply chain suppliers are doing directly or indirectly, and how really they are sustainable. So collecting the right data as there's not yet harmonization or what it should be, what should be a Scope 3 data, and which assumption should be used, is making a really big challenge here. The greenhouse gas protocol, for example, is specified 15 categories to take into account. So there's still a lot of guidelines that needs to be given about assumption and what really we define to be able to support company on that, and then at the end to provide to investor what they need. The other example, and I will not go in deep detail, but it's the biodiversity. This is really similar challenges. How we collect data, how we report data on biodiversity, it's completely new. So a lot of things need to be defined to be able to drive this reporting and support some kind of mandatory reporting and disclosure at the end. So compared to some other environmental topics, I guess these two examples show that there's still a lot of things to do.
Thanks, Julia. Maybe Dennis and Danny, you can quickly address this question before, because I'm seeing a lot of questions coming in, so we will come to your questions very quickly.
Sure. Yeah, let me start first. I totally echo Julia's comment about the climate risk exposure has been the most aligned. I would like to share some updates within the Hong Kong asset management industry about this climate risk exposure disclosure. The thing is that, last year we have been seeing significant progress being made in Hong Kong asset management industry in terms of the climate risk exposure. As we can see, we have been seeing the framework developed by the Hong Kong regulator to actually require all the fund managers to actually disclose how they manage and report climate-related risks. And this framework is actually making reference to an international TCFD recommendation, focusing on the requirements on 4 pillars: governance, investment management, risk management, and disclosure. Another interesting part is that in terms of the disclosure of the portfolio carbon footprint, again, the standard that the framework is adopting is a international standard. The PCAF is basically based on the weighted average Scope 1 and Scope 2 greenhouse gases emission based on the enterprise value of the underlying investment. So I think from the asset management industry perspective, I believe that Hong Kong is definitely tracking very closely to the international standard. I think definitely the progress has been made. But the thing is that, again, one point to highlight is that, again, we have been hearing this word data, data, data. Mm-hmm. It's the same a challenge that we are facing here. Scope 1, Scope 2, is definitely improving. We are seeing, even that there's still a significant gap between Asia and developed markets like, Europe and, and North America in terms of coverage. But the thing is that, we have been seeing improving quality. But everyone knows that Scope 3 is definitely coming. And Scope 3 is very, very useful for the investment manager to make very good, sustainable investment decisions. And again, hopefully, in the future, policymakers or the whole industry can, maybe come up with a very good solution how to actually improve the quality of the climate data further. Yeah.
Thanks. Danny?
Okay. Be a market player, I think I would like to summarize two key trends to make a refreshment. First, I find looking back and looking future, and also looking around the world, we see two trends. One, the climate-related disclosure from a voluntary, and then to a flexible compile to explain, and then to mandatory. And also the second trend is about the complexity. It is from basic matrix to a TCFD incorporation, and then to a taxonomy-aligned stage. Hong Kong alignment to this direction, I think, is very good. It has stepped up very quickly in the last decade. Like since 2002, since last 8 years, Hong Kong Exchange also issued free version of ESG reporting guideline to help to promote the market to ESG disclosure. It improved a lot. And also I found that like the Green and Sustainable Finance Steering Committee also announced that across a relevant region, the TCFD climate-related disclosure will be mandatory no later than 2025. So I think Hong Kong has stepped up very fast. And also, the market is looking forward to local version addition. And also now the CGT is also a very useful tool for investors to promote their some cost investment asset, etc. I'd like to share this point and share.
Great. Oh. Okay. Can somebody help me with the iPad? I lost the questions. If I remember correctly, there are a lot of questions around what Frank just gave us a preview in terms of what Hong Kong HKMA is going to do in terms of a CGT-based green finance, a green classification framework, right? So there are a lot of questions on that. So what are the key considerations when HKMA developed the local classification? And how banks can use the green taxonomy to manage their climate risks and product development. I think, Frank, maybe you can take a first step, and if Danny and others want to jump in, feel free to.
The question basically consists of two parts, right?
Yeah.
What are the considerations? And secondly, what are the use cases? For the considerations, of course, you will see more details when we release the concept paper. But I can briefly highlight some of the feedbacks that we receive from banks. First of all is that actually the market is more ambitious in the sense that they comment on the CGT that it's only EU and China. We are doing business in Asia. How about other Asian taxonomies? Is it possible that there's a harmonization of taxonomies across different regions? That's an issue that they raise. And on that, we think that we need to think about how to proceed it. Because if you look at what the approach the CGT is doing, they just try to, because they want to be as rigorous as possible to identify activities that are considered commonly green across the two taxonomies. But on the other hand, then it would come up with issues like, would that be restrictive because the technical screening criteria could be quite rigorous for the two taxonomies. On the other hand, you can take another opposite approach to look at the bigger pictures instead of, let's say, we set aside the issue of harmonization, focusing on what are the common elements in the two taxonomies. Actually, all taxonomies have some high-level common structure like industry classifications, use of matrices. As mentioned by Danny and a lot of others, that now cross-country comparison is difficult because the metrics are not the same, are not consistent. But if two taxonomies have so many different metrics and criteria, it would be very difficult for you to come up with some sort of solutions. Instead, one possibility is to identify common matrices across different taxonomies. Then we can then use that as a basis for comparison. But inevitably, that would mean that it is impossible to cover all the technical screening criteria in the taxonomies. So actually, there's a trade-off here. If we can identify common matrices, if we only use one or two matrices as a shortcut, then it would facilitate comparison. But on the other hand, that some may consider that as less robust. So these sort of trade-offs are some of the considerations that we need to think about. Other issues like, should we also include transitional activities in the taxonomy? We are all aware that in some economies like Singapore, they have developed the so-called traffic light system on transitional activities. And I think the EU is now also working on this. Another issue is local considerations. Because you know Hong Kong has a relatively small carbon footprint. So our inclination is just to be aligned with international standard as far as possible. But there are also some local considerations. For example, the green building standards, we all know that it is very locational specific. Different jurisdictions have different green building standards. And for Hong Kong, we know that if you can satisfy the local green building standard, that would have tax implications. So these are the considerations that, the factors that we need to consider when we introduce the framework. And as for the use cases, as I just highlighted before, that ideally we can have a universal language on green classification, meaning that we can be used across all cases. Yeah. But in reality, as I mentioned before, if your aim is to do cross-country comparison, then I'm afraid that it's quite difficult that you can have two taxonomies with the same set of indicators. Instead, we need to choose one or two indicators for comparison. So if your concern is really about greenwashing, then we need to have more robust system. But for some simpler applications, for example, if you need to satisfy all the technical screening criteria, say in the EU, then that may be too costly for some applications like SME loans. So are there a way that we can design, take certain elements of the taxonomy and design some key indicators for use for simpler applications? That's another issue that we need to think about. Yeah. Thank you.
Definitely, it comes with a lot of challenges. Yeah. Danny,
okay,
you want to jump in here?
I would like to echo, like the climate risk management or the taxonomy alignment development, I think we need to have some time for the market to adapt it, because it's a new thing. It is a game changer to the market. Like the climate risk management, banks are closely working with Hong Kong MA to involve in common assessment framework, etc., and also to help to do some to develop the local edition of the taxonomy. But in fact, just what I earlier mentioned, the data availability, data standardization, and data integration, it takes time to do that. So bank on one hand to work closely with the government, and the second, we develop some internal guidelines, some sector guidelines for the climate risk, and then gradually one by one step. Because on one hand, we need, I know Hong Kong is stepping very fast, it's a good trend, but on the other hand, in order to avoid greenwashing, I think Hong Kong is also, we need lay a very good, solid foundation to do this step by step. Just I want to share with you.
Thanks. Anything from Dennis? Or?
Yeah. Just would like to highlight is that totally echo what Danny talked about, and also Frank, like, you know, if we need to have one universal comparison matrix, is going to be potentially taking a lot of effort and long time. So that's why, you know, I think as the asset management company, I think, you know, I think the benefit of, you know, us is that, you know, for example, like, you know, for portfolio construction and indexing, I think if there are certain elements that, you know, if in terms of like either CGT or, you know, when you develop the taxonomy, if there are some, you know, elements that you really want to see some pilot user case, this is something that, you know, the beauty of, you know, portfolio construction is that, you know, is driven by scientific approach, driven by data. And as I said, if data is available, then I think, you know, the creation of such user case is not very difficult. And I believe that, you know, once a user case has been promoted and successfully marketed to the public, you know, including institutional investors, sovereign wealth fund, or retail public, I think that would be a standard going to be tested within the ecosystem. And then all the feedback, like, you know, between the policymakers, industry, you know, and also the investor, I think would happen. And I think, you know, this, you know, ECGT or different types of taxonomy are living document. It means that, you know, they are evolving. It will not stop here. It will just keep going. So that kind of feedback system can actually help to enhance going forward. Yeah.
Yeah, I think indeed, I don't think we can afford to wait for the perfect solution for us to do anything, right? So I think there's a very good follow-up question from the audience, is that before we have the formal policy or regulation coming into place, should financial institutions be encouraged to start reporting on their green finance activity, green investing activities based on CGT that is already out there? Frank?
And I guess for that, of course, that's individual banks' decision, and we do encourage them to do so. We understand that at the moment there are some difficulties in obtaining data for assessing some of the technical screening criteria in the CGT. But on the other hand, we already have seen that some banks have already taken the lead to issue green bonds with the CGT as part of the principles or taxonomies they use. So I think that there could be obstacles, but that can be overcome. And as you said, that we can't just afford to wait until a perfect solutions, until the data vendors have all the information available, until it is cost-effective to do so. So I think that if you look at the bigger picture of climate change, why we are here is because we have been underreacting to this. So what we need to do now is to gear up our efforts on this front. Yeah.
Great.
Yeah.
I think, Juliet, do you want to jump in here as well?
Yeah, no, I fully
Very
agree
quickly.
Yeah, really fully agree with what has been said about the imperfect solution and the fact that there will be always evolution, innovation, as well in terms of how we capture the data itself. So we have to be, you know, pragmatic in how to do that, and it's all about, you know, creating new way of solutions to collect data. It could be, you know, we at Moody's, for example, we develop a score predictor, so proxy data, which we know is not as good as an ESG scoring, but at least is trying to fill the gap between what we want now to be able to start reporting and think about the strategy to adapt for climate transition and what we can get. And it's all about, you know, the forward-looking data, the climate scenario, the climate pathway. It will be imperfect, but it's tool that, you know, should support banks, in this example, to be able to start to disclose and think about their sustainability journey. A sustainability journey needs to start, but can last for 15, 20 years. So it has to be evolved, and we have to be at least pragmatic to use great solutions that we know have been done and tested, and some others that are more innovative, but that could fill temporarily gap of this data.
Thanks a lot, Julia, for jumping in. I think that's also a nicely way to go into the next question from the audience, is the role of technology. I think many of you addressed the problems of data, right? Data quality, data availability, maturity. So what's the role of technology to play in helping to push the harmonization of ESG standards and investing across different standards, and particularly when it comes to data? Anyone want to take a step on that?
Maybe I can just start, and it's a link to what I was saying. It's key. So the role of technology is key. We need to have all type of new innovation and new thinking. We cannot continue to start to collect data manually and creating. So we have to really be more open-minded on how we can collect those data. So of course there's in Moody's, we work a lot with our Moody's Analytics, for example, solution about probability of default scenario model, just to be able to try to support the industry with climate scenario pathway and be able to, with simplified assumptions, being able to create some solution. Intelligence artificial is as well key to collect more data quickly and being able to have a common aspect. But for all of that, we need to, I think the key thing is to define what exactly we want to have on those data. And for some climate and environmental topic, it will be easier because it's quantified data. But for example, if we look to ESG outside climate and social, there's still a lot of work to do on how we can define and quantify social topics. So definitely, I think innovation and technology has to be part of this development, and we're seeing more and more fintechs actually focusing on sustainability and ESG data.
Yeah, thanks a lot, Julia. Dennis, in the whole fund management process, what's the data challenge and how do you guys overcome using technology?
Yeah, sure. I guess, the investment management industry has been evolving quickly. I would say now, the investment decision is, definitely we require a lot more data than maybe 10 or 15 years ago. I think the improvement of the data quality definitely help a lot of different types of investment products. Like, if you see, the growth of asset management industry in recent years, it has been driven by ETF, exchange traded product. And of course, when people talk about ETF globally, they don't just talk about the market cap weighted ETF, just like very traditional type ETF. The thing is that the thematic investment has become more and more popular. I think all the development of the investment product, investment decision is driven by the data, because the thing is that the investment decisions can change much more quickly and react more quickly due to more fastly available data and also improving data quality. I would say in terms of the green finance and also development of other climate related or ESG ETF or other investment product, having a good quality of the data definitely can help us to design the product in a much faster way. And also, as the beginning of the talk, I already mentioned the confidence. When the asset management industry, we try to design the product, we have the fiduciary duty. We need to make sure that the investors are aware of the investment decision we are making are being based on very reliable data. So that's something that we really hope to see, this industry and all the technology in terms of data coverage will be evolving.
Mm-hmm. Yeah, and I think what ISSB is doing is certainly pushing us towards that direction in terms of harmonizing disclosure to start with, and that's where you can harmonize the data provided, as a result of disclosure, right? So hopefully, data will become easier for financial institutions and regulators, and and technology will certainly help. I think we are actually out of time, but I really want to thank my speakers, all my panelists, for taking the time to answer, my questions as well as questions from the audience. Thank you so much for putting your questions through. This is probably the most active audience that I ever have in the last 12 months. So thank you so much for taking part. And thank you again. Can I have the speakers stay on the seat so that we can take some pictures? Mm-hmm. Oh, okay, we have the photographer here. Okay, wonderful. Thank you so much, speakers. Please join me in thanking my speakers. Great, thank you so much. That wraps up the morning session. Please come back at a little before 1:30. We have a very packed afternoon with contents and VIP speakers sharing with you the latest development in sustainable finance. The afternoon will be moderated by our Under Secretary General Tracy Wong Harris and Jenny Lee. So thank you so much for spending time with us in the morning. See you in the afternoon.